Good day, class, and a very warm welcome to Synapse Global Institute. I am pleased to have you in this session of Financial Accounting 1, where we focus on building strong foundations that are essential for your success as CPA students. As your instructor, my goal is to help you clearly understand accounting concepts by connecting figures to meaning, logic, and examination requirements, so that accounting stops being about memorizing numbers and becomes a structured way of thinking. In this lecture, we are working with a CPA examination style question based on the books of Sunrise Traders, as at the 31st of December 2024. Before we attempt any calculations or financial statements, it is very important that we carefully read and understand the information provided. This first section, therefore, focuses strictly on reading out and interpreting the items in the trial balance and the additional information, because this is the foundation upon which all adjustments and financial statements are built. We begin with the trial balance extracted from the books of Sunrise Traders. Capital as at the 1st of January 2024 amounts to 2 million shillings, and this represents the owner's investment in the business at the beginning of the year. Drawings amount to 150,000 shillings, showing the value of resources withdrawn by the owner for personal use during the year. Sales revenue amounts to 3,600,000 shillings, which represents income earned from trading activities, while purchases amount to 2,100,000 shillings and represent the cost of goods bought for resale during the year. Opening inventory, as at the 1st of January 2024, is 500,000 shillings. This is the value of goods carried forward from the previous accounting period and forms part of the cost of sales calculation. Trade receivables amount to 750,000 shillings, indicating amounts owed to the business by customers, while the allowance for doubtful debts stands at 30,000 shillings, representing an estimate of receivables that may not be collected. Trade payables amount to 620,000 shillings, showing amounts owed by the business to suppliers. The trial balance also includes non-current assets. Motor vehicles are recorded at cost of 1,200,000 shillings, with accumulated depreciation of 300,000 shillings, indicating that depreciation has already been charged in prior periods. Furniture and fittings are recorded at cost of 600,000 shillings, with accumulated depreciation of 120,000 shillings. These figures are important because they help us determine the net book value of assets before charging current year depreciation. Operating expenses are also listed in the trial balance. Wages and salaries amount to 640,000 shillings, representing payments made to employees. Rent expense amounts to 180,000 shillings, reflecting the cost of occupying business premises, while insurance expense of 90,000 shillings represents the cost of insurance cover during the year. Cash at bank amounts to 460,000 shillings, showing the cash resources available to the business at the reporting date. The trial balance totals 6,670,000 shillings on both the debit and credit sides, confirming that the double entry records are arithmetically accurate. Before adjustments, we now turn to the additional information, which provides details of adjustments required at year-end. The first item states that closing inventory at the 31st of December 2024 was valued at 650,000 shillings. This figure does not appear in the trial balance and must be introduced through an adjustment. The second item relates to depreciation, specifying that motor vehicles are to be depreciated at 20% per annum on a reducing balance basis, while furniture and fittings are to be depreciated at 10% per annum on cost. The third item of additional information requires that the allowance for doubtful debts be maintained at 5% of trade receivables. This means the existing allowance must be reviewed and adjusted to reflect the required percentage. The final item states that rent prepaid at year-end amounted to 20,000 shillings, indicating that part of the rent expense recorded in the trial balance relates to the next accounting period and should therefore not be treated as an expense of the current year. At this point, class, we have successfully completed the first section, which involved carefully reading out and understanding all the items in the trial balance and the additional information. This understanding is critical, because every adjustment and every figure in the financial statements must be traced back to this information. In the next section, we will proceed to demonstrate and explain the required adjustments in detail, and show how they affect profit and the statement of financial position. Let us now proceed to the second section, where we consider the required adjustments. This section is very important in Financial Accounting 1, because adjustments are what transform a trial balance into information that is accurate, complete, and compliant with accounting principles. In CPA examinations, a strong grasp of adjustments often makes the difference between a pass and a fail. We begin with the closing inventory adjustment. The additional information states that closing inventory at the 31st of December 2024 was valued at 650,000 shillings. Closing inventory does not appear in the trial balance because it is determined after a physical stock count at the end of the accounting period. Accounting requires that this closing inventory be recognized as a current asset in the statement of financial position, and at the same time, deducted from the cost of sales in the statement of profit or loss. This adjustment ensures that only the cost of goods actually sold during the year is matched against revenue in line with the matching concept, and it prevents both profit and assets from being misstated. The next adjustment relates to depreciation of the motor vehicle. The motor vehicle has a cost of 1,200,000 shillings and accumulated depreciation of 300,000 shillings, meaning its net book value at the beginning of the year is 900,000 shillings. Depreciation is to be charged at 20% per annum using the reducing balance method. Under this method, depreciation is calculated on the net book value rather than on cost, reflecting the fact that the asset loses more value in its earlier years. The depreciation charge for the year is therefore 20% of 900,000 shillings, which equals 180,000 shillings. This amount is treated as an expense in the statement of profit or loss and added to accumulated depreciation in the statement of financial position, ensuring that the asset is not overstated. We then consider depreciation of furniture and fittings. Furniture and fittings are depreciated at 10% per annum on cost. The cost of furniture is 600,000 shillings, and applying the straight line method means depreciation is charged evenly each year. The depreciation expense for the year is therefore 10% of 600,000 shillings, which equals 60,000 shillings. This expense is recognized in the statement of profit or loss, while accumulated depreciation is increased by the same amount in the statement of financial position. This adjustment reflects the systematic allocation of the asset's cost over its useful life. In accordance with the accrual concept, the next adjustment concerns the allowance for doubtful debts. Trade receivables amount to 750,000 shillings, and the additional information requires that the allowance be maintained at 5% of trade receivables. 5% of 750,000 shillings gives a required allowance of 37,500 shillings. The existing allowance in the trial balance is 30,000 shillings, meaning it must be increased by 7,500 shillings. This increase is charged as an expense in the statement of profit or loss and added to the allowance account, which reduces trade receivables in the statement of financial position. This adjustment applies the prudence concept by recognizing potential credit losses early and ensuring receivables are not overstated. The final adjustment relates to prepaid rent. Rent expense in the trial balance is 180,000 shillings, but the additional information states that 20,000 shillings was prepaid at year end. This means that part of the rent paid relates to the next accounting period and should not be treated as an expense of the current year. The correct accounting treatment is to reduce rent expense by 20,000 shillings and recognize this amount as a current asset called prepaid rent. This adjustment ensures that expenses are matched to the period in which they are incurred and prevents understatement of profit. In summary, these adjustments ensure that income and expenses are recorded in the correct accounting period, assets are stated at appropriate values, and liabilities and allowances are properly recognized. They bring the trial balance into line with the accrual basis of accounting and prepare the way for accurate financial statements. In the next and final section, we will use these adjusted figures to read out and explain all the items appearing in the statement of profit or loss and the statement of financial position. Let us now proceed to the final section, where we prepare the financial statements prepared from the adjusted figures. This section completes the accounting cycle and clearly shows how information flows from the trial balance, through adjustments, and finally into formal financial statements. As required in the CPA examination, we begin with the statement of profit or loss for the year ended the 31st of December 2024. The statement opens with sales revenue of 3,600,000 shillings, which represents the total income earned from trading activities during the year. From this revenue, the cost of sales is deducted to determine gross profit. Cost of sales starts with opening inventory of 500,000 shillings, which is the value of goods brought forward from the previous year, and purchases of 2,100,000 shillings, representing goods bought for resale during the year. From the total goods available for sale, closing inventory of 650,000 shillings is deducted, leaving a cost of sales figure of 1,950,000 shillings. When this cost of sales is deducted from sales revenue, the business earns a gross profit of 1,650,000 shillings, showing the profitability of core trading activities before operating expenses are considered from the gross profit. Operating expenses are then deducted to arrive at net profit. Wages and salaries amount to 640,000 shillings and represent employee compensation for the year. Rent expense, after adjusting for the prepaid amount, is 160,000 shillings and reflects the cost of occupying business premises during the period. Insurance expense amounts to 90,000 shillings, representing the cost of insurance cover consumed during the year. Depreciation on the motor vehicle amounts to 180,000 shillings, reflecting the reduction in value of the vehicle during the year, while depreciation on furniture and fittings amounts to 60,000 shillings. The increase in the allowance for doubtful debts of 7,500 shillings is also charged as an expense, reflecting expected credit losses. When all operating expenses are added together, they total 1,137,500 shillings, and deducting this from gross profit results in a net profit for the year of 512,500 shillings, which represents the true earnings of Sunrise Traders for the period. We now move to the statement of financial position, as at the 31st of December 2024, which shows the financial position of the business at the end of the year. Under non-current assets, the motor vehicle is shown at its net book value of 720,000 shillings, calculated as cost less total accumulated depreciation. Furniture and fittings are shown at a net book value of 420,000 shillings, after deducting accumulated depreciation. The total non-current assets therefore amount to 1,140,000 shillings, representing long-term resources used by the business. Current assets are then presented, starting with inventory valued at 650,000 shillings, which represents unsold goods held at year-end. Trade receivables are shown net of the allowance for doubtful debts, resulting in net receivables of 712,500 shillings. Prepaid rent of 20,000 shillings is included as a current asset because it represents a future economic benefit. Cash at bank amounts to 460,000 shillings, representing liquid funds available to the business. These current assets total 1,842,500 shillings, and when combined with non-current assets, total assets of the business amount to 2,982,500. On the equity and liabilities side, capital at the beginning of the year is 2 million shillings. To this is added the net profit for the year of 512,500 shillings, and drawings of 150,000 shillings are deducted, resulting in a closing capital of 2,362,500 shillings. This closing capital represents the owner's residual interest in the business. Trade payables amount to 620,000 shillings and represent amounts owed to suppliers. When equity and liabilities are added together, they total 2,982,500 shillings, which exactly equals total assets, confirming that the statement of financial position is balanced and the accounting equation has been satisfied. In conclusion, class, this final section demonstrates how adjusted figures are organized and presented in the statement of profit or loss and the statement of financial position. Each figure can be traced back to the trial balance and the adjustments we discussed earlier. Mastering this logical flow is essential for CPA success, as it enables you to approach examination questions confidently, methodically, and with a clear understanding of how financial statements are constructed.